The selling pressure looks set to continue on the Australian share market today after another fall on overseas markets last night. That decline came as crude oil prices surged to a fresh 2.5-year high after reports that the Saudi Interior Ministry detained 22 Shiite protesters over the weekend and vows to clamp down on further protesters in the lead-up to Friday's mass protests dubbed the Day of Rage. There was also a reminder that the European debt crisis still lives after international credit ratings agency Moody's slashed Greece's government debt rating by 3 notches into junk territory. An hour into trade, the ASX 200 index is down just 10 points, or around 0.25%, holding up relatively well, although it did fall 1.25% in trade yesterday. And despite the growing unrest in Northern Africa and the Middle East, we've seen a couple of large-scale transactions in the mining industry pertinent to that region on the market today. Shares in Namibian uranium miner Extract Resources have soared nearly 8% to $9.98, following news that London-listed Kalahari Resources plc has received a takeover proposal. Kalahari holds just over 42% of Extract Resources, and under Australian corporations law it's possible that that could lead to a takeover bid being required for Extract itself. And shares in Zambian copper miner Equinox are down by 3% to $5.63 after the company officially launched a hostile $4.9 billion takeover bid for Canadian-listed London Mining. That company operates a mine in the Democratic Republic of Congo, and Equinox Minerals says that its offer offers better shareholder value than a proposed rival offer from Canadian-listed Inmet. Finally, on the currency front, the Australian dollar fell in trading overnight as international investors moved away from riskier assets. Our dollar is currently buying 101.2 US cents. This is Toby Grimm for Young Stockbrokers.